Trent Brandon Rogers, Bradshaw Financial Planning and Mind Your Money. Thank you for joining us for the market update and actually reallocation update too for the first quarter of 2023. Hope everyone had a great Christmas, great New Year's, got to spend a lot of time with family. We're personally glad 2022 is out of the way and we can start fresh here in 2023, and hopefully the markets will head in the right direction this year compared to last. A couple things we're going to discuss today. Reallocations for one. We'll kind of give you an idea of what the portfolios look like and why we made changes. Also, we'll talk a little bit about interest rates and where we think things are going over the next couple months and what the probability of those rate increases are. All right, Brandon, why don't you just kick us off and talk a little bit about the reallocations, and then I'll come back and talk a little bit about interest rate increases and probabilities of such.
Yeah, so we just made changes in the portfolios, but basically what we're doing, we're still trying to play some defense in the portfolios. Again, a lot of uncertainty still, first quarter, first half of the year. We'll see how these rate hikes coming, what they'll look like potentially, that Trent will touch on here in a little bit. But basically what we did, we added some hedges in there. What does that mean? Well, we put some silver, gold. Usually precious metals do better in times of difficulty, right? So
that's kind of an indication of U.S. dollar strength too. Right. So as we move forward, those precious metals should be pretty good position.
Yeah, should be good. Put in dividend payers, right? Do your dividend stocks as well. Are obviously some places people flee for safety as well. So again, but still kind of keep that large cap focus overall of good large quality U.S. companies. So that's basically what we've done in that portfolio, and just still kind of got some hedging in there just in case. We'll see how the rest of this year really starts out.
Yeah, and really that rolls around the fact that we think growth in the first quarter and also in the second quarter is going to be muted a little bit. I think they're going to struggle. You might get some revisions on the downside, especially from like consumer retail corporations of that sort. We do think earnings will step back here in the first, second quarter, but hopefully ramp back up in the third and fourth going into the end of the year. But really the Fed is really touching on what the economy is doing right now in regards to inflation. It looks like it's working to some extent. We're starting to see that peak rate of 9.1% last summer. Expectations are for it to be 6.6% annualized when we get the report next week on the 12th at 8:30 in the morning. So CPI is the number you're going to be looking for. We do expect that to come in around the 6.6 number. For the month, it'll be 0.5% reduction from where we were last month. So going from 7.1 down to 6.6 is definitely headed in the right direction in regards to inflation. But the other thing that we got to look at is what kind of reductions are we seeing month to month? It's going to take a while to get back to where we were in that target zone of 2 to 3% in regards to where the Fed wants to be from an inflationary standpoint on an annualized basis. But we do expect a 25 basis point increase on February the 2nd, and we also see another 25 basis point increase coming in the March timeframe. Now there is potential for additional rate hikes after that, but we feel that the Fed's probably going to pause after that point. If they do, that could be very positive for the market, and that will give us the green light to maybe get a little bit more aggressive in the portfolios compared to where we're at right now. Anything else you'd want to add to what we're doing? So
again, we're just really focusing on what the Fed's going to be saying. That's really what's driving a lot of this. If we get resolution of the Ukraine-Russia, that should help things as well on the European side and worldwide. So again, those are the things that we're looking at. But again, as you mentioned, once we see some of this positive news happen, we can take off some of these hedges and do some reallocations when we see fit. So again, we'll keep you updated as much as possible and take care of everything else going forward. But again, if you got any questions, feel free to reach out. Let us know anything or any questions whatsoever. But again, Brandon Rogers, Trent Bradshaw with Mind Your Money and Bradshaw Financial Planning.